Today is Wednesday, February 7, 2024. Here are the levels that we will use to trade against in the E-minis today. There are 6 of them. Around about 8 o'clock this morning. Right now it's 8:30. Around 8 or so, there's a pretty big push up, relatively speaking. And they're in the pre-market, they're above 495. They're 495.44 currently. So if they push higher, the highest level we have is at 496.25 on the chart this morning. But if they pull back, then we have plenty of places to buy on a pullback. We will check back after the market closes to analyze any trades taken. Well, it's after 6:30 p.m. The market has definitely closed by now. 2 levels were hit, and the chart is kind of compressed a little bit because they went pretty high off the chart, as it were. So let me close this up a little bit so we can see a little closer the 2 levels that were hit. So these 2 levels here, when they were hitting the spiders, the 5-cent buffer has been factored in. These are the 2 levels that produce trades in the E-minis, and both were recorded. And I think there's some learning opportunities in these recordings, so I'll just jump to the recording and we'll talk through it. So this has been sped up only slightly, and I think I can talk through it the whole time. So the first trade at 495.40, I just put limit order on the chart, as you can see, to buy 2 contracts if they got down to 495.40. What I should do, and I'll show you on the next trade why this didn't work out so well for me. Well, let me just talk through this. So I adjusted the profit target. The 4-point base hit is $400 with 2 contracts. 499.250, and I'm checking here to see how high they got. It was like within a couple ticks of hitting the base hit profit target, 3 cents in the SPY. And I'm just being aware, because if they come back down to the entry point quickly without giving me the base hit, then this would be a near miss, and I would just jump out at a wash, because that would be assumed to be the trade. But they had enough juice to power through, so that was pretty quick and easy. So that level was satisfied, and so I could scrub ahead, but I'll just talk through the next level. So you saw me put the limit order on the chart to buy. What I usually do, and should have done this time, would be to put the order activation in the system, where if the spiders are greater than or equal to 496.20, then sell at the market, whatever the ES is. And I just had this kind of in the vicinity of it to sell 2 contracts up there. And once again, they got closed, pulled away a little bit. I'm checking to see if this was a near miss, trying to find out where the 40-cent base hit profit target would be. 4 cents in the ES. I'm hovering there just to see if they're going to come down, give it another chance to go higher. They never got down to the base hit profit target while this was active here before they triggered it. So there was no problem. But what's interesting is when they did go up to the level, they hit it on the penny, 496.20. And you'll see this in a minute. Right there. So I'm checking it, 496.20. That would have triggered my trade. I was about a tick off, so I wasn't filled. So at this point, I'm looking to see, well, are they going to come down? And that was the trade. If so, then I wasn't in it. And it became pretty clear pretty soon that I missed it. So I should have had it keyed into the system to trigger automatically like I normally do, but I don't know what I was thinking this morning. So after a few minutes, it came down, and there we go. It hit satisfied. So I'm considering that level done. It was a trade that I should have had, but I didn't. And we'll go back to the full day just to get a bigger picture. So with these 2 levels satisfied, waiting for them to either go farther down at an untouched level, or if they continued higher, I had nothing above it. So I did a little experiment. I'll show you what I did. I had no calculated levels above the 496.25 level. So I did a Fibonacci price extension, which I don't normally do. I don't have a reason to do those, but because it was kind of out in the middle of no man's land, I just want to see what would happen. So let me show you where those numbers, let me just show you. So here's an hourly chart with the Fibonacci price extension lines drawn on from this low to this high, and the pullback here. And you'll notice that 498.36 is a 618, and then 510 cents is 75%. So I put levels on that just to see what would happen. Wasn't really willing to trade them up there, but we'll go back to the full day on the 1-minute chart. Let me just show you what happened at those levels. Here are the 2 levels. I just find it interesting that the spiders, they did hang out under here for a long time, but when they finally got to 498.36, which we just saw that was calculated, they bounced away that would have been a base hit right there, well more than 4 points in the ES, and of course they never got any higher than that, but they hung out under that one level. I just find it interesting. Didn't know at the time going into the day they would get this high, but I've been saying for a while, I've been thinking for a while that they're gunning for 500, give or take. So, but anyway, those were the trades today, these two trades, and we'll take a look at the tracking log, and I want to show you a couple other things. So while the two base hits today gave us 8 points in the ES, the week so far, because of the TKO and the fumble that we gave some points back to the market in the last couple of days, this week so far, no matter how many contracts you're trading, is in the negative. The averages is lower than the normal average. So I just want to show you something else here just to kind of prove the point of the law of large numbers, that over time this really doesn't matter that much. So take a look at this. So this is nothing fancy, but I just wanted to take a look at the last couple of years. So this is 2002. Assuming you're trading two contracts, starting out with $50,000. This is every single day, good or bad, all the way through the end of the year, starting with 50 and ending up here 120,000 or so. And this is just the month and the quarters. So what I want to point out is you have times like here, this is like February something, February 15, where at this point it's around 58,000. 2 weeks later, on March 1st, it's down to 54.9. So, and I have it highlighted over here in red. So for that 2 week period of time, you're down $2,700. But does that really matter in the big scheme of things? You can see, I mean, there are times where it's longer. I'll show you one in 2023 where it's almost a month where you're kind of on a flat line. But just to show over time, it really doesn't matter when you know what your averages are over time. So here's 2023. There's a section here. Let's see, it was around the middle of September, 112,000, and almost 20 days, that's a month, 20 trading days, down to 109, almost 110,000. So another loss of $2,000 plus for that period, almost and definitely over a month by the time it regained and came back out of that slump. So it would have felt bad during the time, just kind of like today or in the last few days of this week. Doesn't look great, but this is what the year looks like typically. So I just want to point that out. I hope you found this information interesting, helpful, useful. Feel free to comment, like, and subscribe to the channel to help the videos in this channel gain traction. Thanks, and have a nice day.